What is up, guys? Taiki here, and today I'm very honored to have Ben Cowen on the channel. He was actually my inspiration when I first started the channel because he has this YouTube channel with roughly 500,000 subscribers, and he doesn't do clickbait, thumbnails, he doesn't do fancy editing, and it gave me confidence that if I keep grinding it out, make good content, I can make it as I guess a YouTuber. So thank you for being on, Ben, and how are you doing today?
I'm doing great. Thanks for having me. It's always fun to inspire others to create their own channel and whatnot. So yeah, thanks for having me. I'm glad to be here.
Yeah, so I guess, I don't think you need any introduction, but for those that may or may not know you, like when did you get into crypto, and when was like the light bulb moment that you had when you thought that Bitcoin and ETH was gonna, I guess, be a thing?
Right. Yeah. Well, so with Bitcoin, my undergrad was in math, and that was back in, I took a cryptography class back in 2011. We didn't cover Bitcoin in that class, but we covered cryptography, and it was sort of right around the time that Bitcoin was also having a nice move at the time back in 2011. So it was on my radar then. I unfortunately I was a poor college kid at the time, and I didn't have any money to invest, but that was when it first got on my radar. Was part of it when it into 2013 stuff. I watched it come crashing down. I was like, well, what's going on? Like, what is this? Why is it not going up? And then in 2017, 2016, 2017, I got a little bit better of figuring out how do you actually navigate the market and whatnot. So I would say Bitcoin, I first learned about it in 2011, and I got more and more on board with it as we continued on. But even by 2013, like I was sort of like, I thought it was going to be a decent, a decent crypto, decent project. But I had no idea it was going to go to like, $64,000 at the time.
Yeah.
And then, but then after I would say, like once we got through 2016 and going into 2017, it became a little bit more clear, I think, that it was, it was on this long trajectory where the price is going up, right? Back in 2013, we didn't have that much information, but now we have a lot more data to look at, and we sort of can see where it's headed. With Ethereum, Ethereum was one of those ones back in 2015, 2016. A lot of people called it a scam, and it's sort of similar to today. A lot of layer ones today, a lot of people just say they're scammed and whatnot, but that's what it was called back then. And I also think that maximalism, whether it be Bitcoin maximalism or Ethereum maximalism, it actually hurts you in the long run because you sort of miss out on the gains on other projects, right? And so I think Bitcoin maxis missed out on what Ethereum had to offer, and the ROI that it was going to give back in 2015, 2016, 2017. And so I sort of found it interesting, and then in 2016 I was definitely getting hyped up about it. In 2017 we had the ICO mania, and I thought it was a useful utility, but I always struggled to understand like how something like that could be sustained forever. Like just people printing ERC20 tokens with essentially no utility but a fancy WordPress site and stuff. And then that one came crashing down, but I'm much happier this cycle because it seems like there's a lot more utility going on in the crypto space, and Ethereum included, right? Ethereum included. So that's sort of the story behind Bitcoin, and I was also invested in some other ones back then that aren't they're not as popular today, right? Because you have the new projects today, but that's sort of the story with Bitcoin and Ethereum, and then now we have even newer projects, right? We have new layer ones and whatnot that are constantly being questioned and everything. So yeah, that's my story about jumping here into the cryptoverse.
Yeah, and I can definitely relate to, I guess, being a college student, a broke college student, and like finding Bitcoin and didn't have enough money to, I guess, like take the risk. And yeah, I'm not a fan of maximalism. I actually like it when there are maxis in a particular ecosystem because like they're gonna die on the hill, and they're gonna support the project no matter what. But from my perspective, I call myself like a yield maxi. I go where the hot ball money is. I go where the yields are because that's where the opportunity is. And speaking of other L1s, yeah, I feel like Ethereum maxis right now are like they're kind of coping because they're missing out on these opportunities. And I really encourage everyone to keep an open mind when like doing research on crypto. So speaking of which, I feel like on your channel you cover mainly Bitcoin, ETH, Link, ADA, DOT, and recently Avalanche. And most of those, I guess, other investments, alternative investments outside of Bitcoin and Ether, are L1 tokens, right? So is there a reason why I guess your top conviction bets are these L1 alternatives? Like, can you just give your thoughts on that?
Yeah, so the whole idea with these layer ones, and some people like Polkadot, Gavin would say that Polkadot's layer 0, right? But yeah, the whole idea is that Ethereum is the cream of the crop, right? When it comes to these platforms, and as far as I can tell, nothing's really a direct competitor to Ethereum. But that doesn't mean that other projects won't build their own, their own ecosystems, their own niches, right? They'll have these things, they'll have followings, they'll have networks and whatnot. But what they are is, they're valuing different things than Ethereum, right? So it becomes like the blockchain trilemma, right? Where you have to worry about scalability, decentralization, security, and whatnot. And if you go after one or two of them, then a lot of times you sort of you come short in one of them, right? So you're sort of trying to figure out, okay, well, how can we be all three? And Ethereum is trying to figure out how to be all three without sacrificing, say, decentralization, right? Like it would be easy for Ethereum to if they just raise the block limit, right? They could decrease the fees, like the gas fees would start to plummet. The reason we know this is because, again, like the Binance Smart Chain started off as a clone of Go Ethereum, and they had basically 0 fees, so
Yeah.
it's not like all of these other projects are groundbreaking technology. It's just that they're valuing something different. Okay, so if Ethereum wanted to say be more centralized and lower the fees, the gas fees, like they could do that. But what they're trying to do is they're trying to lower the gas fees in a way that does not compromise decentralization. And just an idea of why that compromises decentralization. If you raise the block limit, it increases the computational requirements, of course, to run a node. Therefore, it makes fewer people able to run the node. Therefore, it becomes ultimately more centralized. Now, other projects, I thought back in 2019 and 2020, I was trying to figure out, like, well, what is the market going to value? Because there's a difference between what I value and what I think the market will value, right? And so I value decentralization. I think that the Bitcoin and Ethereum are the two most massively decentralized protocols, and nothing else comes close to them, right? Nothing else really, not in terms of like a serious project that I would take seriously anyways. Yeah. So I'd say nothing comes close to them. And so I was thinking, well, what are ways that we could hedge against this? Like, what's a way that we could hedge against going, say, like all in on decentralization being the only thing people care about? And the whole idea was, well, what if people don't care about decentralization? Right? There's going to be some people that are going to speculate on other things besides something being decentralized. And we saw the gas fees on Ethereum skyrocket in 2017. And I could tell back then, people didn't like that, right? It was like a huge source of FUD back then. And then not long after the fees went sky high, the whole market came tumbling back down. And so I thought, well, how can we hedge against this, and what are market participants going to value? And I said, well, there's going to be these other layer ones that are going to be sort of competing, right? Like they're, I don't necessarily consider them a direct competitor, but they are trying to go after similar market participants. And you have Cardano, right? We have Cardano. You have Polkadot, you have Avalanche, you have Solana, there's Cosmos, there's Tezos. I mean, you could go on and on, right? There's so many different layer one platforms, and every single week, someone's asking me, well, what do you think about this layer? Like, what do you think about this other one? And what, and so the whole idea is rather than say like trying to invest in 50 different layer ones, like pick the ones that you think will do well, right? Pick the ones that you think will do well and that give you exposure to something different, right? I mean, like Solana is a great example of a project that basically the transaction speed is so quick, right? You don't have to sit around for a long time. It's super fast, but it lacks some level of decentralization. Yeah, we saw that happen the other day. So I think there's this difference between something actually being decentralized and something being decentralized in name only, and so then when something happens, you actually say, oh, it's not really that decentralized. So right now, I think market participants are sort of, we're trying to figure out what will the market ultimately value. I think Bitcoin and Ethereum are the safest bets, but to only have Bitcoin and Ethereum, I think really minimize your potential upside. And so by speculating on some of these other layer ones, you give yourself exposure to the market that has a lot more potential upside with a little, with certainly more downside as well. But again, a lot of people that are invested in crypto are interested in taking on risks as well. So that's sort of how I came to think, like, why would I want to invest in anything beyond Bitcoin and Ethereum? Is because if I had turned my nose up to Ethereum back during the last cycle, you would have missed out on a lot of gains, right? A lot of gains. So to do the same thing this cycle with newer projects, you'd basically be making the same mistake that Bitcoin maxis made on Ethereum, So that's sort of where I'm coming from.
Yeah, and I definitely agree. Like, I feel like my thesis is, in the short term, the market does not care about decentralization. We saw this in Q1 with Binance Smart Chain. It went on a huge bubble. And like, I mean, BNB, like, even I think at roughly, like, it's at $300, but it opened the year like roughly $30. And then after that crash, people were like, okay, what's next? Q2, Polygon, right? It's also centralized, but it's like, that's how I grew my channel. It was like I was just like forming on Polygon. And then Q3, now we are having these other chains with liquidity mining incentives like Avalanche, Phantom. Solana didn't have any incentives, but they have a bunch of backing. So I feel like every quarter there's like a new L1 that people really like, and it's a battle of like, this is gonna threaten Ethereum. I think in the long term it's not going to. I don't really see like a value proposition that these, like, the flavor of the quarter have over Ethereum. But I guess with my channel, it's like, in the short term, let's take advantage of these opportunities, because if these foundations want to throw money at us, then why not just take them, right? So let's transition over to Bitcoin and Ethereum, because those two are also my core holdings in my portfolio, even though I don't really talk about them on my channel. Partly because, I mean, with Bitcoin, I can't really talk about Bitcoin every single week. There's not much to talk about. And with Ether, I feel like 90% of my audience is priced out of Ether, including myself. So there's no point talking about a blockchain that I can't really use. However, I feel like with your channel and with all the data science and research that you do, I feel like you're leaning towards maybe in Q4 Bitcoin taking over dominance again, similarly to how you did, or how it did 12 months ago. And you also often talk about like the ETH BTC Q4 bleed. So can you just briefly go over like your thesis, I guess your macro thesis on the crypto markets, focusing on Bitcoin and ETH? Because I've often talked about taking profits on Avalanche soon. And with my profits, I'm gonna take some profits to Bitcoin, into ETH, because I feel like those bags are getting pretty light, at least for my personal taste, and also rotating to other L1s.
Right. Yeah. Should I go ahead and share my screen?
Yeah.
Maybe that's
because you're a much better TA guy than I am, or just like chart guy.
So the whole idea, and it always comes back to everything comes back to Bitcoin, right? If Bitcoin were to dump from here, then we know it's going to affect everything else in the market. So whether you hold Bitcoin or not, it's still decent to follow it, because it's sort of, it controls the market, right? I mean, like, imagine back over here, or remember, no, you don't have to imagine, like, go back to May and June and July, and you can see that a lot of the layer ones had, they dropped 60-70%. Most of them did. Cardano is one of my favorite ones, and that was the one I chose back in 2019 to be my primary hedge against Ethereum. It's not going to stop it from dropping 60 or 70% if Bitcoin kicks the bucket. So whether you hold Bitcoin or not, it certainly makes sense to at least follow what it's doing, because it will give you the general outlook on how well the altcoin projects that you're following are going to do. Okay, so generally speaking, when Bitcoin is above the 20-week SMA and the 21-week EMA, so we call it the bull market support band, these two lines, the red one's the 20-week SMA, the green one's the 21-week EMA. When it's above those and moving sideways, then altcoins can rally, right? And I'm sure you see this, right? I mean, I know, with Avalanche and whatnot, you see how well it's been doing over the last few weeks. Solana is another one that's been doing really, really well. Cardano was able to put in new all-time highs. A lot of these Cosmos is another one, right? A lot of these projects, when Bitcoin is above the 20-week SMA, the 20-week EMA, they do really, really well. And it's like they just keep going up, you know. But the thing is when Bitcoin drops below this level, if you think back to like May of 2017, what happens during that time? The alt Bitcoin pairs bleed, and they bleed badly, right? It's not even just like a small bleed; it's a pretty bad bleed. You know, for instance, if we were to go look at say like ADA Bitcoin, and you go look at what happened back in May, that's when the ADA Bitcoin valuation started bleeding, and then you see that ADA Bitcoin took off in August, right? The week of August 9th here, and you go look at Bitcoin, what happened the week of August 9th? That was when it opened above the 20-week, okay? And you'll see the same pattern for a lot of cryptocurrencies. Like a lot of altcoins will bleed against Bitcoin when Bitcoin's, you know, when it's having this drop down below, and then they can start to recover during this phase over here. So you have to watch Bitcoin. You have to see, you know, is it in the phase that is going to be helpful for the altcoins that you're holding? And so right now, if you're holding a lot of these layer ones, they're doing really well, right? They're doing really well. Some of them are at all-time highs. Some of them are not at all-time highs, but still, a lot, if you look at the ROI over the last 2 months, a lot of them have seen fairly decent gains. We also know that Bitcoin's been above the 20-week for a while. Now, what would happen though if Bitcoin either goes below the 20-week or goes into price discovery mode? So there's two separate scenarios there. If Bitcoin goes below the bull market support band, we know what will happen. We already experienced it in May, right? Alt Bitcoin pairs will drop, right? We all saw that. We all know we would expect that to happen. Alt Bitcoin valuations will get absolutely wrecked, and alt USD valuations will get absolutely wrecked if that happens. But that's not the only thing that can wreck alt Bitcoin valuations. The other thing that can wreck these valuations are when Bitcoin is in price discovery mode, right? And when I say price discovery mode, what I really mean is it needs to be going parabolic. This phase over here, where it went to like 58K and then 61K and then 64K, you know, these were pumps for ants, right? This is not like major price discovery mode where Bitcoin's going up like 2x in a month or something. It was just barely moving higher. And during this phase is when a lot of altcoins were just going absolutely crazy. So now we find ourselves in somewhat of a similar situation that we were in exactly 1 year ago, right? Exactly 1 year ago, we were in this exact same situation. Bitcoin was riding the bull market support band, right? That's where we are right now. We're at that same level. And as long as we hold it, right? As long as we hold these levels and we don't fall below it, then alt USD valuations should hold up relatively well. Now, of course, you know, you're going to have some fluctuations in there, plus or minus 10%, 20%, right? You're going to have these fluctuations based on the idiosyncratic risk of that individual altcoin. But if Bitcoin goes parabolic, a lot of people might assume that all the alt USD valuations will follow suit. But what we actually know from historical patterns is that it actually tends to be that alt USD valuations can trend higher when Bitcoin's going parabolic, but they usually get left in the dust, right? Like everything just bleeds back into Bitcoin. No one wants to miss the Bitcoin move because all the money just pours back into it. And the altcoins don't rally until Bitcoin calms down. And you guys remember, and you'll probably remember that over here. Remember this move from Bitcoin. Yeah. October, November, December, Bitcoin dominance was just shooting up, right? I mean, let's go look at it. Let's go look at the Bitcoin dominance back over there. So if we, you know, here it is, right? Like, so September, we saw the dominance bottom in September of 2020. And that was the same time that Bitcoin ended up holding the 20-week moving average as support, the 21-week EMA as well. And from that point on, it bottomed at around, you know, 57%. And then it had a rally up to around 73 or 74%, which ended up being more or less like a, you know, a double top, right? Because it also hit that same level exactly, or September 2019, right? About a year before or so. So we find ourselves in a similar situation today. We're testing the 20-week, right? We're trying to hold it as support. We just had a wick below it, but you know, we don't care about wicks. No one's getting out of bed for a wick. We just care about, will it hold it as support, you know, on the weekly time frame? Can we stay above it? And if we do, if Bitcoin stays above it for a number of weeks and we start to go, let's say we take out 53K, if we take out, 64K, when we take out 64K, things are probably going to get heated pretty quickly. Like I imagine Bitcoin would go, it's going to go back into price discovery mode, and hopefully it's not the type of price discovery mode where it goes to 67K and then kind of settles back down for 4 weeks. But hopefully it's that price discovery mode that takes it to 6 figures. Okay, and so during that time, let's assume that happens. During that time, we would expect the Bitcoin dominance to go up, because that's what the market will chase. They'll chase Bitcoin because when Bitcoin goes parabolic, the market sits still. Now, here's the thing that a lot of people kind of get confused about. That doesn't mean that altcoins won't rally as well, right? We know they will. They'll trend higher with time. If you go look at say Ethereum, Ethereum is what we should look at here. If you go look at Ethereum, what happened with Ethereum in September, October, November? Well, it trended higher. It went from like $360 or so up to around 700. It put in a 2x in that amount of time. So it did trend higher. But what you'll also notice is that the Ethereum Bitcoin valuation, though, it dropped like a rock. From September or the end of August, it went from a valuation of 0.041 all the way down to 0.02289. This is, essentially dropped, if we, almost 50%, right? If we take a measured move here, it was around 45% or so. So a pretty substantial drop. And it just was not able to keep pace with Bitcoin. And the reason, and we speculated that this was going to happen back in 2020. We said, all right, guys, expect Ether to bleed against Bitcoin in Q4. We also said it in 2019. We said, expect Ether to bleed against Bitcoin in Q4. It's not like it's that novel of a concept. The only reason we say it is because every Q4, Ether Bitcoin tends to go down. And this is just what we've seen in the past, right? Ether Bitcoin tends to bleed in Q4. And what it normally does, though, is it sort of sets us up for what's going to happen, hopefully in Q1 and Q2, right? Like this move here, this started in January. This major appreciation of the Ether Bitcoin valuation, 1,800% or so, started in January. This one here started in late December, and it took us all the way up through Q2, about a 2,000% move. You just see these things play out time and time again. They typically start in late December or early January, these Ether Bitcoin valuation shifts in the market. And you can see this one last year also started then as well. We had 100% move back in January. We came back down and we continued along. And we've seen these rally through May, right? We've seen them rally through May or through June before. And then they by the end of the year, it tends to bleed. So, really the question, of course, that everyone wants to know is it going to bleed again? I don't know, right? I don't know. And it doesn't really affect my strategy. To be completely honest, like I just sort of see it. If it bleeds in Q4, then I would more or less just see that as an opportunity to DCA into Ethereum in hopes that it continues the same pattern in Q1 and Q2 of the following year. Because every single time we've had a Q4 bleed, which has literally been every single year, it also followed up with a nice move in Q1 and at least Q1 and sometimes Q2 of the following year. So right now, everyone's talking about it doesn't need to go through this bleed, and that what's more likely to happen is that it's just going to come up here and then it's going to do something like this. Hey, if that happens, I'm happy, right? I'm happy to see Ethereum keep pace. We also have to remember though that everyone always says this, right? Every September, everyone always says this, and historically, Bitcoin dominance takes over, a lot, especially if it's a price discovery mode. So this is what we need to keep an eye on, right? If Bitcoin either holds the 20-week and goes parabolic, or if it dumps below the 20-week, like either scenario, it's more likely than not that we'll see Ether Bitcoin bleed On the chance that it doesn't bleed and Ether is able to keep up with Bitcoin, then it sort of throws, it sort of means that, well, we can't really necessarily expect the Q1 Ether Bitcoin pump anymore, right? If the same scenarios are playing out. So that's sort of how I see it.
Yeah. I think things are sharing that. And like, as you always say, it's like, don't take it up with me, take it up with the data, right? It just happens every single year historically. So like, why fade it? It's kind of weird how seasonality works. I feel like any rational player would think that, seasonality wouldn't be a thing. But if it keeps happening, then, I guess there's something there. And yeah, thank you for sharing the Bitcoin bull market support band as well, because I feel like my channel blew up starting in like April. And I know that there's a lot of people that got into crypto in like 2021 and didn't really experience the Bitcoin dominance, like the Bitcoin surge in Q4 of last year. And I was living it, and it was insane. I was like, what? Like, how is this thing at 40K in like this period of 2 months? Like I was like blown away, and all my altcoins were like, it's not doing anything. I mean, they went up some amount, but like, it underperformed. So like I mentioned earlier, like I don't talk about Bitcoin much on my channel, but I am going to start to DCA into Bitcoin just because my avalanche bags are just getting too large for my taste. And if I want to take risk off, then I want to bet on the king.
Right. Yeah. It's all about managing your risk, right?
Yeah, because like you mentioned, like if it dips below the the bull market support band, then Bitcoin dominance should go up because it'll bleed less than the altcoins. And also, if Bitcoin enters price discovery, then you're better off holding Bitcoin as well. So from a risk reward perspective, it does make sense to look into Bitcoin as a way to go risk off if you are heavy into AVAX, Luna, or whatever other coins that I often talk about.
Right. And you can see that, I mean, exactly what you said, right? Like Bitcoin dominance went up when it was going parabolic last year. Bitcoin dominance went up when it dropped below the 20-week, right? So that, as you said, it's a way to help mitigate some of your risk in the event that it either goes parabolic or in the event that it dumps. It just helps you navigate crypto a little bit safer, I would say.
Yeah, awesome. Yeah. So speaking of safer, as I mean, in the past in the past 6 weeks, I've been covering Avalanche, and you've been bullish on Avalanche for quite some time now. So I know it's one of the things you cover on your premium list with your risk dashboard. So can you just briefly go over, like, yes, Avalanche is putting in its 10th weekly green candle in a row. It is getting heated. I do think it will go higher, but maybe it does make sense to de-risk a little bit, at least for me personally, right? Not financial advice. So can you just like briefly go over like where do you think we are when it comes to Avalanche and like its own cycle?
Right. Yeah. Yeah. Avalanche is one of those ones that had Bitcoin not corrected back down to say 40K. I mean, Bitcoin's at 48K, and Avalanche was doing well. I mean, we've been seeing it continue to do well. And what I was speculating on, like, all right, well, Avalanche Rush is coming up. We're having this, $180 million DeFi incentive program. And you think about this money ball that just hops around from one layer one to another, chasing the gains, right? And so the speculation was, and I've been bullish on Avalanche well before they even had this program. I mean, I first spoke about it on my channel a long time ago, but the idea was, all right, well, we've seen some of these other smart contract platforms pump and do really well. And so, like, for instance, with Cardano, my speculation was it'll pump into smart contracts, and then it'll probably then kind of have a lull after that. I was like, well, what's something that isn't going to have a lull in the short term? I was like, I think Avalanche is looking really strong as we head into the next several weeks. And my speculation was that if Bitcoin doesn't correct, then it's going to be very, very strong. Now, unfortunately, we did get a Bitcoin correction. So it's just sort of the game that you play, right? When Bitcoin gives you the ideal conditions, the altcoins can absolutely go parabolic. When it corrects, then Bitcoin has a way of mitigating the potential gains that altcoins can see. Now, with that said, Bitcoin dropped from 53K to 40K, and now it's back at 44, 45K. And Avalanche still hasn't even had a red weekly candle. Okay. So, I mean, it shows you how strong, right? It shows you how strong AVAX has been over the last 10 weeks. Cause I think, as you mentioned, this is like 10 weekly candles in a row that are just one green after another. And so, I think that the momentum is there, right? Like the main thing I think in the short term that would stop AVAX from continuing to pump higher would be Bitcoin dropping, right? Like if Bitcoin has some like catastrophic drop or something where it just goes straight past the 20-week and it goes back down to like 35K or 30K or something, or even worse, that's going to kill the altcoin market in the short term. Like we know that's going to kill the altcoin market in the short term. Doesn't mean they can't recover, right? I mean, that's what a lot of them do. But that's what would kill it in the short term. And so what we're doing up here is we're sort of playing this game of, all right, well, as long as Bitcoin is here, right, as long as it's up here and trading sideways above the 20-week, and we have all this stuff going on for AVAX, the more likely path is up. And this is what I've been saying for the last several months, is that the more likely path is up. Because again, I don't really rely on traditional TA. I just try to more so rely exclusively on momentum in terms of trying to gauge what I think is going to happen in the short term. I don't trade any of that stuff, but this is what I sort of just think in terms of momentum. Hey, if an asset is moving up, it's more likely to continue moving up than an asset that's not. So if I had to say, what's more likely to move up next week, I would say, well, pick a project that's already moving up, and that one's the more likely one to continue moving up than one that's, say, dropping or going sideways. Like, some people will say, well, you should always just buy the ones that drop the worst. Really, no. I mean, I think you ride the racehorse, right? Like, ride the racehorses and just let them run for a while. So my speculation right now is that, Avalanche is at $74 or so, $73, $74. We still have a ways to go if Bitcoin holds the line. This is crypto is full of a lot of if-then statements. I wish I had a crystal ball. I don't. But as long as Bitcoin is in this area, then I think it's more likely than not that AVAX will continue to do well. And one of the ways that I navigate it is I use this like risk metric. And here's the one for AVAX. This is one of the ones I talk about on my channel. And the whole idea is we base the risk levels on what the asset has been able to do historically. And for some of them, we account for diminishing returns, reduced volatility, and whatnot. And we try to use these to figure out what is our risk on this asset at any given time. And what it shows is that, when we get into these levels over here, when it gets dark blue or close to zero, it means it's very low risk based on where it has been historically, right? It's very low risk. So like, while the price here back in July was a lot higher than it was last year, the risk on it was about the same, in fact, because again, it's basing it on what's historically done. And so now, you can see we've been climbing up, right? So we went into the dark blue, over here, light blue, green. So we're coming up the risk metric, then it turns into yellow, orange, red, and then dark red. Right now we went from dark blue to light blue, green, yellow, slightly off yellow here, and like we're getting slightly up in this region. But what it shows is that there is still room for AVAX to run, right? Doesn't mean, I've seen plenty of altcoins where they don't go back up to 0.9 risk immediately. I mean, it could be a year before we get back to that level if Bitcoin goes below the 20-week or something. But what it shows is that if Bitcoin holds the line, and AVAX continues to rally, then it's not going to take very many more weeks for the risk on AVAX to get to a similar risk as what we saw earlier this year before it actually, came down for a while. Okay, so that's the idea. And the whole idea behind it is, it doesn't mean you sell everything if you want to take profits. You maybe just skim some off the top occasionally. Like you say, all right, well, if I take the color out of it and plot risk on the secondary y-axis, you say, all right, well, what I'm going to do is, when it gets to 0.7 risk, maybe I'll skim like 1/10 of my position off or something. And maybe if it gets to 0.8, I'll skim 2/10 off. And if it gets to 0.9, maybe 3/10. And then I'll just let the rest ride for the market cycle, however long that lasts or something. So it's just one way to navigate the market, where you actually try to incorporate risk in how you navigate it. And you say, all right, well, we're probably not going to go up forever. And we can at least use historical moves to try to gauge how far extended are we.
Yeah, I really like this. And yeah, this is, part of your premium list, and I'm subscribed, and it's a great service. And yeah, it's because when you're living in these moments, when Avalanche just keeps going up and up and up every single week, it's really hard to act objectively, especially because you mentioned the $180 million incentive. Well, they're allocating 10 million tokens. And when they announced it, it was $18 roughly. So it was 180 million. But as the price keeps going up, the liquidity mining incentive becomes bigger, right? At $100 AVAX, it's $1 billion liquidity mining incentive. And as the price keeps going up, then everyone, social media, YouTube, Twitter, everyone's like, oh my God, like it's going to keep going up. Like it's going to flip all these coins. And I feel like at that point, the euphoria is going to be like pretty insane. But taking more objective metrics like this, the risk metric, like what has AVAX done in the past, and given what it's done in the past, like what is it capable of doing, it gives me a more easier way to, okay, like maybe I should take some off at 0.7, or maybe 0.65, or roughly where we are now. It's like maybe I should start taking off right now, because it's not guaranteed we go to 1, but we just know that it's capable of going to 1.
Yeah, exactly. Nothing's guaranteed in this life, right? Except death and taxes. Yeah, so we just don't know like what it's going to do. I should say that my AVAX is locked up, so I'm not currently taking any off. But if it were not locked up, that might be a different story. But yeah, I mean, like right now, I think, and I think one of the interesting things with the risk metric too is with Solana, just 2-3 weeks ago, we saw the risk levels hit triple ones against USD, Bitcoin, and Ethereum. And it was triple ones for one day. It was when Solana went to like $208 or $212, whatever. And then since then, it pulled back a lot. Now, I mean, of course, there could be a fundamental reason behind that with what happened over on the Solana network and stuff. But still, what I say is just instead of assuming that this time is different, if you always assume that this time is not different, at least you take profits, right? Like at least you take profits and you live to fight another day. And on the off chance that this time is different, that's the reason why you don't necessarily sell everything, right? You keep some of it in case this time is different,
Yeah, exactly. And I think you mentioned this too on your channel, but I always think about, okay, what's the next easiest 2x with a good risk reward? And I totally think Avalanche is capable of getting to $200. I mean, they have a great ecosystem, great projects, great team, a bunch of money being like fueled into the ecosystem. But like for you to, or for anyone to hold AVAX from 100 to 200, that 2x is going to be really risky, right? So my thought is, what if I can just rotate that into Bitcoin ETH, maybe some stable coins to farm with, or other ecosystems, because other ecosystems also have liquidity mining programs scheduled. We have Phantom, we have Harmony, we have Algorand, we have Celo, and I'm sure more blockchains, like they're gonna like throw money into their own ecosystem because it works, right? Because I talked to Luigi, who's the head of DeFi at Avalanche, and he said that, yeah, like we looked at Polygon, their successful liquidity mining program, and then like modeled theirs off of Polygons. And now all these other blockchains are like, okay, like it works for Avalanche, it works for Polygon, all right, like we're gonna do Phantom, etc. So I do think it pays to be an opportunity maxi, right? Not an ecosystem maxi, where just understand that there are liquidity mining programs coming in like in Q4, Q1, and probably more in the future. So you don't have to take on that much risk to turn a profit in crypto, because I don't talk about leverage trading or taking on too much risk with like degen farms and whatever. But the opportunity cost of getting rugged or getting liquidated is super high, because if you get rugged for $1,000, it's not just the $1,000, because it's $1,000 plus the yield you would have earned on the $1,000 plus whatever capital appreciation that you could have experienced holding Bitcoin or ETH, right? So it's always good to manage your risk, and that's one of the reasons why I'm thinking about taking some Avalanche off, even though I think it's going to go higher. Because what if I'm wrong and I can't sell the top? I don't expect to sell the top. No one can.
But yeah, I mean, as you said too, it's always based on what's the risk on the next 2x, right? That's the way I think about it. That's all right. I mean, if it goes to 150, great, and if it goes to 300, great, and if it goes to 600 from there, great, or 1200. But it's sort of like I think a lot of people fail to understand that, like if let's say Bitcoin, for instance, goes to 150K, and then there's some people that think it's going to go to 300K. I'm not one of them, to be clear. But like riding Bitcoin from 150K to 300K is very, very risky, right? Like that would be a very risky move to make. But you would also get the same return if Bitcoin drops 80% and you buy it at, say, I don't know, 50K, and then it goes up to 100K again. Like, it's all about what is the risk on the next 2x. Like for Bitcoin to go from 3K to 6K wasn't that bad, or from 6 to 12 wasn't that bad. 12 to 24, 24 to 48. 48 to 96, it starts to get a little riskier, and every single time, right? It's just riskier and riskier.
Yeah, exactly. And yeah, I mean, there's obviously a lot of, I mean, I feel like every ecosystem enters a bubble. That's, I mean, I've experienced, I mean, we saw BSC, we saw Polygon, we saw Solana, Phantom, and I think Avalanche is starting to enter the euphoric phase, right? That's what I like to call it. And I don't really operate that well in euphoric markets just because it's really hard to like know when will this party
Right.
ever end. So, you know, I think it's really useful to have the risk metric on into the cryptoverse, as well as, you know, just understand that no one can sell the top, no one can time the top. So let's just dynamically DCA out of the markets. Like, who
Right.
cares if you miss out on additional gains if you lock in gains, right? Because like I'm not like suggesting like, you know, just cash out everything into stable coins and like not do anything with it, right? Like if you rotate into Bitcoin and we expect Bitcoin to trend to $150,000, then like that's a pretty comfy hold, at least in my opinion. And with DeFi, you can take Bitcoin, ETH, all L1s except Bitcoin and ETH as collateral on most money markets like Aave. So, you know, there's a lot of ways that like with Bitcoin and ETH, they have less upside on average, but they also have less downside. And, you know, I'm probably going to accumulate them in the next couple of weeks, maybe next month, anticipating the potential Bitcoin dominance taking over in Q4. And then maybe accumulate some ETH too, assuming it bleeds against Bitcoin.
Right. Yeah, that's sort of what I'm looking for. It's like, you know, if it bleeds against Bitcoin, then I'll probably be heavily accumulating it in preparation for the bleed to stop.
Yeah. Well, I think this is a great conversation. I know I have to go soon, so I don't take up too much of your time. But for, you know, those that want to get to know you more and want to follow you, like, do you have, like, can you tell us your YouTube, Twitter, etc.?
Yeah, I mean, I have a YouTube channel. If you just search my name, Benjamin Cowen, you'll find it. Twitter, into Cryptoverse, and yeah, I mean, I'll send you some of the links, and I guess you can put it maybe in like the description of the video. But
I'll do that.
yeah, definitely follow me on the different platforms. And if you're watching me here and you're not subscribed to this channel, I would encourage you to subscribe, because, you know, you go over a lot of things that I don't talk about on my channel. So it certainly does provide like a, you know, a complementary view of the market.
Yep. Yeah, awesome. Thank you guys for watching, and yeah, have fun farming out there.